a single best chart, and let's do it on the quiet that is out there. Well, I guess it's the quiet out there. Vonnie, the VIX closing at a really amazing 12.11. Here is the VIX back, 5, 6, 8 years before the crisis. This looks like it was made at chart camp for Bloomberg Surveillance. We did this at chart camp yesterday. Up goes the VIX with all that fear. And down we go, and certainly the regression from the Lehman lows, which is that massive fear in the middle of the chart, is to a calmer, quieter market. And Vonnie, is just a quiet out there in equities versus the noise we're seeing in bonds and foreign exchange.
Yeah, well, I mean, in foreign exchange, you're looking at the euro below $1.12 again, so that's quite a big move. Two big figures in the last 24 hours?
Bill Lee from Citi, when I look at that, I think of models that are built on the assumption that low volatility means a safe bet. Does that make you worried?
That makes me very worried because people are focusing on the wrong thing. I mean, volatility is what they call the second moment, talk about nerd talk, but what I'm worried about are these fat tails, kurtosis, right? The fourth moment, skew, the third moment. Those are the scary parts.
Second, third, fourth moment. What does that mean?
Volatility, that's what the VIX is measuring. Volatility has come down, but the likelihood of a big event that's a bad event has gone up.
I don't think we've mentioned kurtosis for, what, 2
well,
years?
They put in my last agreement with Bloomberg that if I mentioned kurtosis, I had to work, an extra 10 hours a week.
That's why Tom asked me to do it.
But seriously about this goes back to Nassim Taleb, who looks at a different curve, the Poisson curve, versus what we look at, the bell curve. And what you're saying is we're setting ourselves up for what all of our viewers fear, which is a jump condition.
The rare event, but the bad event, right? It's a big consequence, low likelihood event.
Is Greece that bad event if it unravels and affects the banking system of Europe?
That's everybody's fear. It could trigger that bad event. Greece itself is nothing.
Right.
But Greece could be a catalyst for whatever this bad event is.
And what's so important here, Vonnie, before we go to photos, is Bill Lee's got real-world experience of this at the IMF, where we went from 1994 and everything was fine until it really blew up about 1998.
What was LTCM? One bet, on the run, off the run. Where are we now? One bet, long dollar, right?
Well,
or flatteners.
Okay.